Hello everyone, welcome to the market opening bell on Friday, December 5th, your 10-minute guide to the stock market. Hong Kong stocks fell first, then rebounded. The Hang Seng Index opened 43 points higher, dropped 111 points in early trading to a low of 25,649, then staged a recovery. By the close, it had risen as much as 230 points to a high of 25,990. The index ended the day up 175 points or 0.7% at 25,935. The H-share index rose 77 points or 0.9% to 9,106, while the Hang Seng Tech Index gained 80 points or 1.5% to close at 5,615. Total market turnover reached $179.3 billion, up more than 9% from the previous day. Mainland funds traded a total of $75.688 billion with net southbound inflows of $1.48 billion, down from $2.279 billion from the previous day. Among the top flows, net buying of tracker fund at $2.606 billion, Wuxi Biologics $315 billion, Xiaomi $231 million, Xpeng $102 million. Net selling of Tencent was $1.346 billion and SMIC $458 million. According to statistics, southbound funds have now recorded net purchases of Meituan for 6 consecutive days totaling $2.288 billion. Net purchases of Xiaomi for 5 straight days totaling $2.052 billion. Net sales of SMIC for 11 consecutive days totaling $3.449 billion, and net sales of Tencent for 3 straight days totaling $2.459 billion. Technically, the Hang Seng Index briefly fell below its 100-day moving average at 25,806, but quickly regained it, a close call. The trend still needs a clear breakout to confirm direction. Mainland A shares showed mixed performance with choppy movements. The Shanghai Composite closed at 3,875, down 2 points or 0.06%. The Shenzhen Component Index rose 51 points or 0.4% to 13,006, and the Chinex Index gained 30 points or 1% to 3,067. Total turnover in Shanghai and Shenzhen combined reached 1.5489 trillion yuan. The renminbi central parity rate against the US dollar was raised by 21 pips to 7.0733. Reports say the Trump administration is considering an executive order next year to promote robotics development. Meanwhile, Tesla released a video on the X platform showing its humanoid robot Optimus running smoothly in a lab, which has boosted Robotics Concept Stocks in Hong Kong following strong overseas momentum. Speaking of robots, China Mobile recently officially launched its household service embodied intelligent product, the Lingxi quadruped robot. As China Mobile's first consumer-grade quadruped robot, Lingxi is designed around human-like interaction and scenario-based services, deeply tailored for needs such as child companionship, elderly care, and home security. It integrates large AI models with strong natural language understanding and continuous learning capabilities, allowing it to accurately interpret user intent and gradually adapt to each family's unique lifestyle. For example, when family members are away, it can automatically patrol the entire home along preset routes using high-definition cameras and environmental sensors to monitor for gas leaks or intrusions in real time and immediately push alerts to the user's phone. For the elderly, it can proactively check in at set times. If it detects prolonged stays in the bathroom or a fall, it will immediately go to the location and notify family members. For children, it can engage in voice interaction, play nursery rhymes, tell stories, and even perform talents with its flexible limbs, becoming a fun companion. It also features a mobile photographer mode that autonomously follows and films during family gatherings. Market research firm IDC forecasts that Apple will ship 247.4 million iPhones this year, up 6% year-over-year and surpassing the 221 record of 236 million units. The growth is driven by the new iPhone 17 series, with particularly strong demand in China significantly accelerating sales. IDC expects Apple's handset shipments in China to rise 17% year-over-year in the fourth quarter and now projects full-year growth for the Chinese smartphone market at 3%, previously forecasted a 1% decline. As the world's third-largest smartphone brand and a leading consumer AIoT platform, Xiaomi has nearly 1 billion connected AIoT devices as of Q3 this year, the most globally. Xiaomi enjoys a relative advantage in developing AI phones. In its AI strategy, Xiaomi has developed multiple dedicated large models covering vision, audio, speech, etc. Its AI Agent SuperXiaoAI ranks among China's top 3 native assistants alongside those from Oppo and Huawei, with a 71% penetration rate among Xiaomi users. Leveraging its vast interconnected consumer devices, Xiaomi is well positioned to build one of the world's largest consumer-grade physical intelligence ecosystems. 2 new listings will debut today. Tianyu Semiconductors, stock code 2658, closed at 49.34 Hong Kong dollars in Philip Morris grey market yesterday, down 14.9% or $8.66 from its IPO price. Per lot of 50 shares, excluding fees, paper loss is $433. Xiao Noodles, stock code 2408, closed at $6 in the grey market, down 14.8% or $1.04 from its listing price. Per lot of 500 shares excluding fees, paper loss is $520. CPA Australia expects Hong Kong's new IPO fundraising next year to reach at least $300 billion, with more listings than this year. The institute believes the Hong Kong Stock Exchange will top global IPO fundraising rankings again in 2025 after taking first place this year. It noted that Hong Kong EX has signed multiple MOUs in the Middle East and hopes some Middle Eastern companies will list in Hong Kong next year. U.S. stocks were mixed on as investors remain cautious ahead of today's inflation data and next week's Fed meeting. The VIX Fear Index fell 0.3 points or 1.9% to 15.78. The Dow opened higher but closed down 31 points or about 0.1% at 47,850. The Nasdaq fluctuated but ended up 51 points or 0.2% at 23,505, while the S&P 500 rose 7 points or 0.1% to 6,857, both indexes posting their third straight gain. The S&P and Dow are now just 1 to 1.2% away from all-time highs, while the previously lacking Nasdaq is only 2.4% off its record. US stocks have a good chance of hitting new highs before year-end. The Nasdaq Golden Dragon China Index, which tracks Chinese ADRs, rose 30 points or 0.4% to 7,731. Meta jumped 3.4% on reports that Mark Zuckerberg plans major budget cuts to the Metaverse division, with layoffs possibly starting as early as next month. Microsoft announced it will raise global prices for Microsoft's 365 commercial and government subscriptions by up to over 16% starting July 2026, citing more than 1,100 new features including AI-powered productivity tools and enhanced security. Its shares rose 0.7%. Nvidia rose 2.1%, Tesla rose 1.7%, Alphabet down 0.7%, Apple dropped 1.2%, Micron dropped 3.2%. For the week ending November 29th, seasonally adjusted U.S. initial jobless claims dropped 27,000 to 191,000, the lowest since September 2022 and well below the expected 220,000. Separately, U.S. September manufacturing new orders rose 0.2% month-over-month. August revised to up 1.3%. Transportation equipment orders rose 0.4% for the second straight month, supported by a 0.2% increase in vehicle orders and a 30.9% surge in defense aircraft orders. Our stock pick today is Hesai Group, stock code 2525. Hesai is primarily engaged in the design, development, manufacturing and sales of advanced LiDAR products. It is a global leader in 3D LiDAR solutions, with its LiDAR products widely used in autonomous driving, robotics and industrial automation applications. According to data from Gasco Auto Research Institute, the group has maintained the number one position in the vehicle-mounted primary LiDAR segment for 7 consecutive months. In August, its market share reached 46%, approximately 1.5 times that of the second-ranked player and 2.4 times that of the third-ranked player. In the robotics sector, Hesai has recently signed new LiDAR supply agreements with several global leading companies in robotaxis and unmanned trucks, including Pony, Hello, JD Logistics, and Motional. Its customers now span North America, Asia, and Europe. In Q3 this year, the group demonstrated strong momentum in both business scale and operational efficiency, benefiting from the continuously rising LiDAR penetration rate in ADAS and robotics, combined with robust shipment volumes. Q3 net revenue surged 47% year-on-year to 795 million yuan. In September, Hesai became the world's first LiDAR company to achieve annual production exceeding 1 million units. The gross margin remains stable at a healthy 42%, while operating expenses decreased 23% year-on-year, reflecting the significant benefits of the group's ongoing optimization in cost control, operational turnover, and quality management through the application of AI technology. As a result, Q3 net profit reached a record high of 256 million yuan. Cumulative net profit for the first 3 quarters stood at 283 million yuan, achieving the original full-year target 1 quarter ahead of schedule. Based on this performance, the group has raised its full-year 2025 GAAP per net profit guidance to 350 to 450 million yuan. In the ADAS field, LiDAR is rapidly becoming standard equipment for advanced driver assistance systems. Hesai has secured destination contracts from its 2 largest ADAS customers for 100% LiDAR integration across their entire 226 model lineups. Additionally, the group's ultra-long-range high-performance LiDAR HKEX has won another destination contract, this time with one of China's top 3 new energy vehicle manufacturers. The related models will simultaneously be equipped with multiple blind spot LiDAR units, FTX. The group currently expects that each L3 level vehicle will be equipped with 3 to 6 LiDAR units, with a per-vehicle LiDAR value of approximately $500 to $1,000, which will significantly expand Hesai's potential market size. Recommendation: buy at $155, target price $170, stop loss $147. I do not hold the above stock.